Our next guest runs a liquidation firm specializing in retail. For his take on just where we are in this environment and whether America still has too many stores, we're joined by Jim Schaye. He's the CEO of Hudson Capital Partners. So we're coming up a tremendous year for liquidators. Bad news for retailers, good news for your business. Where are we in this? Are there still too many stores?
Well, I still think that there's a glut of retail in the United States, but quite frankly, what we saw last year with Armageddon, where we had Circuit City, Linens and Things, Gottschalk's, Mervyn's, Fortunoff's, the list went on and on. Quite frankly, as of October, or even a little bit slightly earlier, the market changed. And companies that would have gone into liquidation, for example, Eddie Bauer got itself into trouble, quite frankly, did not go to liquidation. You saw Filene's Basement. J. Jill, which was a troubled retailer, did not go to liquidation. It ended up being sold to Golden Gate Capital, as Eddie Bauer was. So there was a number of retailers that last year would have gone directly. This year they got bought up by strategic buyers or private equity firms.
So what changed there? Was it loosening of credit becoming a little bit more available, or was it just a change in sentiment?
There's two factors that I think have changed a lot. One is that yes, there is a change in sentiment. There is the retail lenders, that's Wells or B of A or GE is loosened up, and they're now interested in jumping back into the fray. And then, of course, there's been a lot of renegotiation with landlords. Leases have been renegotiated all over the place, and very successfully, may I add.
So you make a business liquidating some of those firms that do have issues, but so many firms have had to sort of reinvent themselves in this climate as things get better in the retail space. So what are you going to do to try to still book returns yourself in an environment where there are perhaps fewer opportunities?
Well, there's always going to be, the companies that get into trouble. I mean, that's just going to happen. It's happened in good times. It's happened in bad times. Yes, we had a very unusual what was going on last year, and quite frankly, it got out of control. Now what we're seeing is that we're partnering up with strategics that are looking to buy some portion of a chain. For example, when we were involved with Eddie Bauer, we were working with a strategic buyer who wanted to buy the brand. They wanted some of the stores. They didn't want all the stores. So we agreed to partner up. We were going to buy off the real estate that they weren't interested in, and then we were also going to liquidate out the inventories in those stores. And it's not much different than, quite frankly, when we were involved with Tower Records a couple of years ago.
That sounds more like the licensing business, though. There's still value in the name, though perhaps not in the inventory or not in the space itself. Well,
in the case of Eddie Bauer, that was the case. But you have right now on the forefront Penn Traffic, a 76-store supermarket chain in upstate New York. You have a very active bidding going on for that chain, where quite frankly, again, 6-9 months ago, that company would have gone away. And that is, somebody joked to me this morning, that's like a Chapter 27. It's been 2 times at 11, then plus another small bankruptcy. So that company has been in and out of bankruptcy. But meanwhile, you have Tops, who's jumped in with a very aggressive bid at $85 million.
Okay.
And
Tops at $85 million for?
All of Penn Traffic.
Everything.
Everything. All the assets. I mean, they'll close some stores, and we'll work with strategic partners who may be interested in bidding against that particular transaction.
Do you think that's a fair number?
It's hard to say at this point. I mean, quite frankly, water reaches its own level when it comes to bidding.
All right, thank you so much, Jim Schaye, CEO of Hudson Capital Partners, joining us here for a look at the state of retail.